How much do you really need to invest to start investing in the stock market?
You can invest with as low as 1,000 naira.
The stock market does not reward you because you waited. It is not a game of patience. It's a game of knowledge. The other day, someone asked, if I invest in the stock market today and I wait for 6 months, will it add up? No, that's a very wrong misrepresentation of the stock market. You see, the stock market does not reward you because you waited. It is not a game of patience. It's a game of knowledge. That's why we are here, to show you every why behind every bullish or bearish movement. My name is Providence, and today we'll be discussing 5 stocks you can actually invest in and make so much money in 2026. You see, my guest is not just somebody that is just a stock analyst. He's also a stock market researcher. Like I always do, please welcome Mr. Ekanem. Welcome to Clockwise again.
Thank you very much. Thank you.
Today we're not discussing cybersecurity.
No, we're not.
How is the market?
Which one? Is it the stock market?
or the tech market? How is the stock market?
The stock market, well, it depends on how you look at it.
Are people crying?
Yeah, some people are crying. People who bought gold at 5,600. Just 3 days later, gold was trading at 4,400.
Yeah.
That's $1,200 down. So for those who chased the hype, of course, they are crying. If you want a deeper cry, go to silver. People that bought silver at the highs are crying. But which is one of the things we're talking about today, which is you don't chase the market.
Okay, now you see, today's conversation, let's just narrow it down to the 5 stocks we can actually invest in 2026. And should I say these stocks will do well from your own analysis? But before we get there, I want us to do a foundational conversation on what the stock market is. Now, I want you to talk to me now. Talk to me as someone that has no financial background about the stock market. What is the stock market?
Okay, the stock market is a place where people go to sell something. But unlike your traditional market where you go to sell goods and services, in the stock market, people go to sell parts of companies. So, for example, let's say I have a company and I want other people to be part of the success or failure of that company. Then I can sell bite-sized, part of the company to people. So people can buy in and be co-owners of that company. So the platform that provides an opportunity for people to do that is the stock market. And so you have the stock exchange, which is a digital marketplace where people trade equities or stocks.
You're talking about buying and also selling at the same time. Now, I want you to actually make this explanation more simpler. Or better still, relate it to more physical things that can be related.
Okay, so for example, when we talk about buying, let's say you go to the market to buy plantain. So when you go to the market to buy plantain, let's say we have a number of people that are coming to buy plantain. The price, because I know one thing people mention is why do we see price going up and down?
Okay.
So for example, let's say we have a bunch of people that show up to buy plantain, and there's very few of the commodity in the market. Everybody wants to buy it. So guess what will happen? The sellers will realize, okay, so we have a bunch of people that want to buy this. So steps up the price. It's basically the forces of demand and supply.
Okay.
So the higher the demand, the higher the price for its fixed supply. The same thing happens if there's a glut in the market, for instance. Then let's say there was some torrential rains and then storms. When during storms, most of those plantain trees actually go down. So a lot of people have plantain to sell in the market. Then there are very few people that want to buy.
So when there is high supply?
So that means there's a high supply and there's fewer demand. So that what will happen? A lot of people wanting to sell and fewer people wanting to buy. That pushes down the price.
So let's relate this to stock. So why do people buy stock? Why do people sell stocks?
People buy stock when they believe that a company is going to, like I mentioned earlier, I said there are tiny pieces of companies. So if you believe that there are factors that will make a particular company to grow, then you want to buy into the ownership of that company. And then that's why people buy into company stores. People buy equity in companies. The same thing happens but in the reverse. If people believe that companies are facing some very serious macroeconomic headwinds, some very serious leadership issues, or lack of demand for their product, people would, okay, that means this company might not be as successful as we think, or maybe there's something else. Companies on a quarterly basis, they do give what we call earnings guidance. So, for example, they would tell the market what they expect to the next quarter to look like. And so, if companies come up with either the previous quarter was poor, maybe they did not. There was what we call an earnings miss. They did not meet up with what they are told the market they will meet in terms of their earnings, or they give even if they beat on earnings, but they give what they call an underwhelming market guidance or earnings guidance for the next quarter. People could say, "Oh, that means the company might not be making as much. So why don't I get out of my position?"
And also leadership problem.
Yeah, leadership could also happen. For example, if for example the company brings in a new leader who is not as strategic to be able to make sales, to be able to get the company, get strategic partnerships that will move the value of the company. Then investors could say, okay, you know what, I'm not sure. I don't trust this guy, this guy's leadership style, so I'm actually selling my position. When you have more investors selling their position, that takes down the market.
Now, if you follow those that are not actually players in the stock market, one of the biggest confusion they usually have is how to differentiate what is stock, what is bond, what is equity, what is shares. Okay. Now, can you give us a practical differentiation of all of them?
Okay, the reality is that stocks, shares, and equity, it's actually the same thing, put differently. So they are tiny pieces of a company. So equity, when you say equity, I have a stake in the company. So if you look at, they are actually the same, referring to the same thing. But bonds are actually debt instruments. So for example, when you buy a bond, you're actually lending money to either a government or a company with a specific interest. There are differences. So we have treasury bills and we have bonds. So anything below 1 year is actually a T-bill, but anything above is actually a bond. So you are looking at bonds that have what we call maturity periods. So if you have, like, let's say a 10-year bond, that means before you get the principal sum, that will be in 10 years. But you get paid what we call the coupon or the interest. Let's say if the bond is, let's say 16%, that means every year you're going to be paid 15% of the principal amount, which is, let's say you took out a 1 million naira bond at 16% coupon. That means every year you're going to get 160,000 naira through to the expiration of that bond, to the maturity of the bond. So the bond market is debt. The other one is equity. So bond, that means it's safe because the government will always pay back. So we have government bonds are by far the safest because government will always pay back. They have ways of paying back. They will issue new bonds to be able to pay back all investors. But for companies, these are what we call corporate bonds. Corporate bonds are being rated because when a company has a history of paying back its debtors, people that give it money in terms of bonds, then the company you can say that company is an A-rated company in terms of their bonds. You can give it an A rating, meaning that it is relatively safer to actually buy into those bonds. Of course, the benchmark has always been the government bonds. So if the government issues, let's say 16%. Corporate bonds cannot be 16% because there is still that level of risk, given the fact that it is a corporate entity, not the government. So you could have corporate bonds that come in at maybe a premium rate of, let's say, 3% above the government rate. So so people can loan to companies, reputable companies, and then they expect to get their. It operates the same way, but this one you're actually lending to companies and not to government.
Now, why do you think people prefer investing in the stock market than saving money in the bank?
Okay, so saving money in the bank and
Because it's actually safe.
investment, yeah, it's safe. It's safe, really, but in reality, it is not safe because you are actually losing money
Based on the interest.
based on the fact that, for example, let's say the interest, if the inflation
Inflation, right?
rate is, if inflation currently, let's say the headline inflation is 15%. What that means is that your 100,000 naira this year would only be worth 85,000 naira next year. But and that you have lost money. How can the bank pay in interest? Can they pay 15%? No, they can't. So that means you are technically losing money. That's why we would say, if someone gives you 1,000 naira note, that's the highest value that money will ever have in its life, because as from that time, inflation starts to set in. So a way of beating inflation is by investing, and that's why you would always hear what they call the hurdle rate. Hurdle rate meaning every investment is compared to how they are able to beat inflation. So, for example, if you bring an investment and say, okay, we are looking at the 20% return on investment, that means the real return or the absolute return is 4% if inflation is 16%. But when it comes to saving, even if you go for high interest saving, for instance, and then the bank offers you as much as 5% per annum, and then you are looking at an interest rate and inflation of 16%, the real return on that money is minus 11%. So you realize that you are technically losing money every single year when you go the route of saving rather than investing. So the advice is that you should think about investing. Of course, you should have what we call some buffer, just in case you experience life throws curveballs at you. So, but for that, you are not going to do it in the bank. You can do what we call cash equivalents. You can take out short-term treasuries. So there's something I want to let you know. These treasuries, the bonds that we talk about here, you don't necessarily need to wait until the maturity. That's why they are called cash equivalent, because you can actually trade in bonds for cash. So that's like literally holding cash. So, but you cannot hold cash it's like holding ice in the desert. It melts away, and all of that. So the advice is for you to have your money packed in cash equivalents, like bonds, like what we call bonds, essentially. Some people would, if you have up to 5 million, you can go for what we call commercial papers. But essentially, you want to some part of your money should sit in bonds. And what that allows you to do is that it also allows you to take advantage of some kind of market dislocation. Let's say an asset is, for some reason, of course, the price of that asset is actually not following its fundamentals. That's what we call market dislocation. That presents a buying opportunity. Sometimes you can have a generational buying opportunity. But if you don't have cash, you can't take advantage of those opportunities. That's why people that are actually wealthy, they sit on some good amount of cash. Because in the lead up to 2008, Warren Buffett was sitting on so much cash pile that people were like, this guy has lost his investment streak. But he knew what he was doing. So when the global economic meltdown happened in 2008, Warren Buffett was buying companies pennies on the dollar. Companies that were worth 3 billion were trying to sell for about 100 million. So that's the advantage of having cash on the sidelines.
Safe to invest.
Yes. So you can also, for you to be able to invest or take advantage of opportunities.
Okay.
Yes.
Now,
so
let's assume that investment is a journey, for instance.
Yes.
Let's say somebody that is actually undertaking that journey for the very first time. What are those indices the person should look out for to actually agree that you're on the right course? For instance, you want to start investing. What are those fundamentals? What do you look out for in a company that actually brings your interest?
Okay, before I mention what to look out for, my recommendation for newbies has always been go to the broad market. Instead of having to pick names, for starters, you can go to the broad market. You have in the Nigeria now, you have the NGX. which is actually an index that tracks performance of the. Okay, so in the US, for example, you have the S&P 500, which tracks the top 500 companies
in the US.
In the US, so you are literally not picking names. You are actually investing across the all 500 companies. So what happens is that when a company underperforms, it is dropped, and then another company is added. So you always have the top 500 companies. And then if you look at 2024 or 2023, the S&P 500 returned 24%. In 2024, it returned 23%. In 2025, it returned 19%. Yes. And this...
We had that conversation, me and you.
Okay, so you have so that means if you had just put your money into it, you without reading a single annual report, without looking and doing any research whatsoever, you just put your money into this instrument, the S&P 500, you would have made those returns I just mentioned. So that is that. So you have the S&P 500, you have the Dow Jones Industrial Average, you have also the Russell if you decide to go to lower caps, you also have the Nasdaq, the US Tech 100, the top tech 100 tech companies in the US. So beyond that, if you decide to dabble into picking names, there are things that you have to look out for. Number one is you have to look at the fundamentals of the company. There's something that Warren Buffett says. He said that the market is a voting machine in the short term and a weighing machine in the long term. So what that means is that hype can actually push prices up. But that can only last for so long. I mean, I don't need to tell you, we've seen what has happened with gold and silver. But fundamentals will always win in the long term. That's why we said that the market is a weighing machine in the long term. So what we mean by that is you want to look at the fundamentals. When push comes to shove, it's the fundamentals that actually win. So you want to look at the fundamentals of the company, because for me, I don't like people to think. Someone came to my office and told me, listen, what can I invest in 6 months? So my point is, why do you want to invest in 6 months? There is something we call that Albert Einstein calls the eighth wonder of the world, and that thing is called compound interest. So you cannot take advantage if there's anything that compound interest relies upon is time. So you give it time. Fundamentals will always play out when you give it enough time. So you want to look at the fundamentals. The second thing you want to look out for...
No, let's break down the fundamentals.
Yes.
What are the fundamentals you are looking out for?
So what is the business doing?
Yes,
what is it selling?
Yes.
How relevant will this thing be in the next 5 years?
Okay.
If you are investing for 5 years, for example, will people be willing to pay for the product or services in the next 5 years? Those are fundamentals. That's number one. Number two, government policies. Where do you see the government? I mean, government policies could change, but for some countries, they have something like a long-term plan. So what will happen in 5 years in terms of government policies, and how would that affect this business? The next is the leadership. Some companies have leadership, people that is the leader of the company. The company's leadership visionary. Are they operators? Because if these companies are not operators, if the leadership is not visionary, they can be left in the dust. We've seen example. I don't want to mention names. We've seen example of companies that were in the forefront of their industry. Today, nobody wants to touch them. With even a pool. So. Those also play into fundamentals. You have to understand what the fundamentals of a particular company is before you actually trade your cash for their stock.
Okay.
Then, apart from leadership, you also want to look at the partnerships that the companies have. There is something you would observe. Well, Nvidia, for instance, invest in OpenAI. Invest in XAI. They invest in a number of companies within their ecosystem. And the reason is that they build this partnership, and that makes them to have what we call a moat, to have what we call resilience. It is almost impossible for all of them to crumble at the same time. So those are some of the other fundamentals you could also look at. The partnership that these companies have, things that will actually resist all of the hype. But fundamentals is what you have after the hype is stripped off of a particular company. So you must look at those very critically before you can make that decision on what to invest in. That's so fundamentals. That's one. The other thing you also look at is cash flow. People underrate what cash flow means for companies. There is a reason why Apple, the Mark 7, these guys are sitting on hundreds of billions of dollars in cash. It's not because they like cash so much, but because cash flow allows you to weather very difficult times. We saw what happened when saw what happened to Amazon stock. We saw what happened to Apple stock. We saw what happened to even Nvidia when DeepSeek showed up. Sometimes you can support the company in terms of, let's say something happens to the company now and everybody wants to dump the company shares. You can actually do what we call buybacks. If you don't have the decent cash flow, you cannot do that. Number one. Number two, you might want to go and buy, maybe you want to expand to other markets. You can't do that without cash flow. If you're a dividend-paying company, you need cash flow to be able to do that. If you want to go for key hires, there are some people that you might want to hire, bring onto your team. Engineers, we saw what Mark Zuckerberg did. He went on a poaching mission to get the best hands into its AI program. You will not be able to do that if you don't have a decent cash flow. There's something that happened to, if you look at Oracle, when investors began to think that Oracle did not have the cash flow to be able to fund the investments that the investment it projected. You saw what happened to the share price. So cash flow is very, very important. Cash flow is like the lifeblood of any business. So you want to look at cash flow. If you have time, you would also look at the reports, annual reports. Companies do what we call earnings calls. So where the CFO, the CEO, or the CFO of the company speak to investors. Earnings calls. Every quarter, companies talk to investors, talk to the market. How was the previous quarter?
Yeah.
If the company beat on, let's say, on their earnings projection, then the market knows about it. You also have what we call guidance. The company tells the market, this is what we expect to have in the next quarter. Some companies do try to, be very conservative in their guidance so that they can easily beat those guidance. But remember, the markets are forward-looking. So a market will not look at, they will look at, okay, you beat on top and bottom lines, yes, but what about the next quarter? Because that's a past event. What we're looking at is, for the next quarter, what are you going to be able to do? Companies at this point, they like to do what we call just a quarterly guidance. They don't do half yearly or annually. Some companies do, but the most common thing you see is earning quarterly guidance. So look at the quarterly guidance. Is this what is this company projecting to do or to make in the next quarter?
Okay. In
terms of dividends, in terms of some of the things that they want to investment and all of that. So you look at those two. Then the final thing I would want to also want you to look at would be to look at how resilient is there's something we call price to earnings ratio. If a company is so highly valued as compared to the rest of its of the industry, then that suggests that it might be a little bit too overvalued. You might not want to mention names like Tesla, because Tesla is a very crazy case. Tesla at the time was trading at 241 times earnings. If you look at Tesla as an automaker, a car maker, others like Toyota, GM, Ford, Chrysler, and the rest were actually trading at around between 23 to about 28 times earnings.
Okay.
But Tesla was doing 341 times earnings. You would ask yourself, wow, that's insanely overvalued. That's an exceptional case because investors don't look at Tesla as a car company. Rather, they look at Tesla as a technology company. As a matter of fact, Tesla has now fully pivoted to AI.
Okay.
So you have the full self-driving, autonomous driving, and Optimus robot, and these are the things that will really skyrocket.
So you have to
the
look at
company.
what the product or the service the company is actually offering.
Yes, the service the company is
All right, now
offering.
before we actually move to why we are here, which is to discuss the 5 stocks that will be so successful in 2026, how much do you really need to invest to start investing in the stock market?
You can invest with as low as 1,000 naira.
Okay.
So there are fractional shares that you can buy nowadays. You can invest with as low as
Just register with any broker.
So you register with a broker. You can even register. Nowadays we have investment apps. You have Bamboo, you have Truth. You can name them.
Okay.
So you just register, create an account. There's something we call so those brokers, those investment apps, there's also central securities clearing systems. So that ensures that your account is verified, is safe. So once that happens, you just deposit and you start.
All right, let's go to the main issue of today. 5 stocks. First of all, list them. The 5 stocks.
Okay, so the first, I actually looked at industries.
Okay.
The first industry I will be looking at is telecoms. Telecoms because
everybody uses
AI is everywhere now, and so people need data.
People use data.
Everybody. And now, if you don't have an internet-enabled phone, it's almost believe that you must be living under the cave. So data, people will need data. A lot of people need data. AI is now a phenomenon, and the only way you can access it is through data. That's so. In that regard, we want to look at, when I look at last year 2025, I think, and then projection for 2026, I think MTN comes to light. So MTN comes to the front burner. The street actually predicts that MTN should be able to make 7.8 trillion naira in terms of revenue this year. MTN has a lot of things going for it. It's the leader when it comes to telecom and, of course, data services.
Yes.
So MTN is a name to look out for. There are a few macro headwinds, though. It's predominantly the FX, the foreign exchange market. That affects, because MTN, as you know, is not a Nigerian company. So what that means is that as FX fluctuates, it affects them.
That affects them.
Yes.
That really affects the business. It just affects.
But you know that most of these companies, they rely on things that are bought in US dollars. Some of their staff.
But I think the naira to dollar rate is actually good now.
Yeah, it's good. It comparatively to last year or 2023 is better now. I told someone before coming on to the studio that there was a day I was doing, I think I just bought the dollar for 1,550 naira. Before I refreshed the page, it was showing 1,600.
People were even praying to be 2,000. People predicted to be 2,000.
It actually hit 2,000 naira in some black market.
Let's not discuss for that. Okay.
I know why you don't want us to discuss for that. But
all right.
The point is, so away from that, then MTN is in good shape.
Okay, one.
So MTN. The next I would want to mention would be, I would want to go to by the way, MTN is trading at 14 times earnings. So it's
in good shape.
It's in good shape. So it's not a crazy valuation. The next I would want to mention is the construction industry.
Okay.
Yes, construction industry, Dangote Cement. Of course, you know that human beings, Nigeria's population keeps on, and now houses are becoming very expensive. Yeah. A small face me, I slap you is now going for you hear crazy amounts for rents and so and all of that. So
that's what we tell people. You see, you have to understand the business of the company you want to invest in.
Yes. So the prospects for construction is very industrials, and construction is, the prospects are quite
Dangote
good.
Cement too.
So Dangote Cement, that's for me, and it's trading at just 18 times forward earnings.
Okay, so it's not overvalued.
It's not overvalued.
Okay.
So it has everything working for it. The next I would like to go for is I think consumer goods and food, beverages, and for this I want to mention Guinness. Guinness did very well.
Yeah, even last year.
Yeah, Guinness did very well, and they are good. Guinness is actually, when you talk about things like beverages, they are like the biggest shot in the market in Nigeria. So they will continue to maintain that. And they are trading at just 12 times forward earnings.
People will continue to be drinking. People will be drinking every day.
People will continue to drink. Perhaps except me. So people will continue to drink.
Okay.
And that means that's a huge market.
So you can actually invest in
So it's something you can invest in. I'm basically looking at the valuation, and I'm looking at the prospects too. The market keeps on expanding, and then there is no so serious competition. I know some people will mention, especially people from here, we're talking about we have champion breweries and all of that. But I mean, by the way, they just raised 42 billion, or they just went out to the market to raise 42 billion. And you know, the share price has been moving rather. Of course, for that kind of liquidity event, you would expect a lot of
fluctuation,
of volatility in the price.
So we have MTN, we have Dangote.
You have mentioned MTN, Dangote, we've mentioned Guinness.
So it's the fourth.
Then we also have Okomu. Okomu oil, and I'm particularly interested in Okomu. You know why? Not because of what happened last year, but because of what will happen this year. This year, maybe some people that are in Abuja and some northern part of the country might have a different experience, but here in the south, we've not had Harmattan. And you know very well that Harmattan decides how palm fruits or how all palm trees fruit.
Yeah.
So that means if we had little to no Harmattan, that means the price of palm oil will be insane.
Yeah.
And guess who stands to benefit? Okomu. You know, they are trading at a higher valuation, though 16 times forward earnings. So for me,
is 16 not too high?
16. Well, but I mean, you just heard what I just told you moments ago, that we are projecting a very difficult time for palm oil this year.
Okay.
So when I say difficult time, I'm not saying that the price will crash. I'm saying that the price will be very high. I'm very certain that once 30 liter of palm oil will get to as high as 70 to 80,000.
Okay, now it's about 37,000.
But it will get to 70,000 because when the supply, of course, is limited, then the demand is even higher. Then that means that we're going to have a lot of the price hike will be insane, and of course, Okomu stands to benefit so much. And then, of course, finally, I will go to the finance. But I can't talk without mentioning financial services. Of course, I can't cease to mention financial services, and of course, the name.
Banks.
Of course, banks.
Yeah.
The name.
Waiting for the banks.
Of course, banks have actually been a very good deal.
Man.
In terms
of the recapitalization, like that, all of them are just meeting the recapitalization day.
Banks have been printing a lot of money. These guys have actually left the job
They've kept this the industry, the stock market, very strong for a very long time.
Of course, especially during the dollar thing, because banks were making an insane amount in arbitrage.
You can watch banks like Zenith Banks. They actually met the 500 billion recapitalization.
Zenith Bank, First Bank,
GT Bank,
you name them. Yes. But GT Bank, GTB, GT Trust Holdings is the one I'm going to mention here now when it comes to financial services.
Okay.
Because if you look at the banking system now, it's not just about the traditional banks. What are people doing now? People are looking for banks that have digital platforms, very robust digital platforms.
And GT goes for it.
And GT goes for
Number
it.
one, no.
And GT has a way of really attracting the new generation.
I think they can actually stand.
If it has to, GT Bank sits between the traditional bank and the new generation. Yeah, because you have a lot of people. There's a wealth transfer going from the millennials or from the baby boomers to the millennials, and so guess who sits in that nexus? It is GT Bank. So, and they have the platforms ready to go. So if you look at fundamentally speaking, GT Bank is well positioned. You can't really mention valuation for banks is actually tied to the asset value. So which GT Bank also has something very good going for it. And then you're also looking at a lot of given the fact that this wealth transfer is happening, that means a lot of the people that you're looking to target beneficiaries of this transfer are actually people that love digital services.
Yeah.
So the other guys that will be coming in, of course, we can't mention them because most of them are still privately held, the likes of MoneyPoint, OPay, and digital banking platforms. But most of these guys are still privately held. So you might not look at, you can't look at really investing. They are not listed in the stock market.
Yeah.
So, but what the closest to them is the GT Bank I'm talking about. So I think it's going to be a very good pick for this year in terms of financial services.
So MTN.
So we have MTN,
Guinness.
we have Dangote Cement,
Guinness.
we have Guinness, we have Okomu, we have, of course,
GT Bank.
GT Bank. There are a few others that I could call honorable mentions.
No, let's remember.
But
Let's keep the 5.
Okay.
Now, before we actually go, let's just throw a little light on what we are going to be discussing next.
Okay.
Yeah, we'll be talking about gold. So, give me 2 sentences. just say 2 things on the gold market currently.
Okay, the gold market is actually having a very sharp correction. Not just gold, silver, or let me just say precious metals, really. And the reason is because
A little pullback.
you have to understand.
No, don't say sharp correction. A little pullback.
No, I don't think it's a sharp correction. No, it's not.
It's not a pullback.
If you look at something above 30% from its highs, that's not a pullback. That's a sharp correction. So, and here is the reason why a lot of people don't know why gold was really moving. Central banks were diversifying away from the US dollar. Retail also jumped on the bandwagon. And the reason was because look at what happened to the DXY. People were not very confident in who was coming in to replace Jerome Powell. So that's why everybody wanted to jump to safety. And now Donald Trump surprised everybody by bringing in Kevin Walsh.
Yeah.
This is a guy that is very big on having the Fed slash its balance sheet. He's not a guy that would drive down interest rates, that would cut interest rate the way people thought a Trump stooge would do.
Yeah.
And so what that
Is he
means,
trying to surprise the world?
I don't know.
He just like doing things the way it feels.
I don't know, but I think Donald Trump is a guy that respects, in fact, he values his performance by what the market does.
Okay.
He knows what will happen. And I think the Treasury Secretary, Scott Bessent, is doing a very good job, because Scott Bessent is a guy that he's been a very successful hedge fund manager. So he knows that, let me give you something to think about. Last year, in 2024, when in the lead up to the election, the Fed actually lowered interest rates by 100 basis points.
Yeah.
But guess what happened to the bond market? The 10-year actually increased by 100 basis points, meaning that investors are not drawn into that. Oh, we are lowering interest rate. They actually look at what the economy looks like. So essentially, the market actually thought that a stooge will be coming in to replace Jerome Powell, and that's why they piled into gold and of course silver. But with Kevin Walsh coming in, that expectation has crumbled completely.
There's something China is doing about silver.
But you know who drives the market? The US.
The US, yeah.
And you know what else drives the market? The bond market. As a matter of fact, whether it's commodities, whether you're looking at commodities, stocks, ETF, anything, you name it, the bond market drives everything. So what happens in the bond market determines what happens elsewhere.
You're letting too much out of the bag. And you want us to we'll continue this conversation in our next episode.
Okay.
Thank you for coming. Thank you very much for coming.
You're
You've
welcome.
done justice to it. Now, on that note, we come to the end of today's episode of Clockwise. Now, my guest was Yenekbon Ekanem, a stock market analyst. Before we go, please do not forget to like, subscribe, share, and also put on the notification bell on this channel. And also, do not forget that the illiterate of the 21st century are not those who did not go to school or those who will not go to school, but are those who have refused to evolve as their environment is evolving. My name is Providence. See you again.